That is what we're dealing with. So the people that are buying gold right now are the billionaires and centi-billionaires. They're not here so much to make money. It's not, oh, I made another $1 billion in glowing gold in my gold position. No, it's about preserving the living standard. Gold and silver now is signaling that distress and that people are getting out of the system altogether. It's just about getting out of the system, preserving your living standards. It's happening in Australia. If you try to take $10,000 or more, they can ask you why. In Europe, in next 2 years, the money will be phased out completely. Like the cash might have been remained to only be spent on petty things like toilet paper. But anything over $1,000, you have to go within that system. The reason is, if you want to fly or if you want to buy gold or silver, you'd be flagged. Gold went up from 2,000 to 5,000 without a stop in 2 years. The big guys are going to have position to gold already did, and it's already taken trillions of dollars to get gold to where we are. So I would not be surprised if gold to consolidate here between 4,600 to 6,250. And silver, at 70 gold to silver ratio, silver is going to be between $60 to $100. So that is my target for silver for 2026. My view is the gold and silver is heavily managed and manipulated through the advent of the futures market. So at the peak of the market, silver traded 1.2 billion ounces in a day. That's the annual production of silver. So that is recognize this is the system we're dealing with.
Welcome back, ladies and gentlemen, to the All In Crypto podcast. I am your host, Rupert Pickering. And today I am delighted to be joined by John Lee, the CEO and Executive Chairman of Silver Elephant Mining. John has spent years in precious metals and mining finance, and he's known for strong contrarian views on silver, from the supply deficit narrative to why silver can behave like a leveraged bet on gold and the industrial cycle, which we're going to be getting into. So this is a silver first episode. What's driving the next move? What could break in a stress event? How to think about miners versus metals, and how gold, rates, and even crypto fit into the same macro picture. John, welcome on board.
Yes, first time on your show. Thank you for the invite.
This is very timely given everything that's going on in the world. I think there's a lot of unrest and uncertainty that, of course, markets are reflecting broadly in regards to, if you look at the world as a big picture. Silver perhaps signaling something that I want to get onto in regards to a shift that's taking place in our world. Before we do that, let's talk about silver and the recent move that it made, taking out the 1980s high. Why do you think silver is acting from a price point of view in the manner that it is today? Why do you think it's made the moves that it has?
Right. Well, first of all, I bring a bit of a unique perspective with over 25 years of investments in the mining and metals industry. First 10 years as an investor, and then later 15 years as a CEO of a couple of mining companies. And before that, I actually came from a .com background. Spent the late 90s working in the Silicon Valley. So I do have the technology dimension to share, and therefore maybe applicable to sort of digital mining in the crypto market, of which you guys specialize in. With regard to silver has always been money, like gold. And it's only in the last, since the 1910s, it's only in the last 100 years that gold and silver has been decoupled, where the world has gone into fiat system, which means money is being printed out of thin air. But in order to sustain the system that's controlled by a few cartels, that gold and silver prices have to be actively managed. And gold was kept in the lid under $2,000 for since the 1980s until only about 3 years ago. So silver broke out $2,000 in 2024, about 2.5 years ago. So technically speaking, when gold broke out at 2,000, it raised almost right away to 3,500. And silver, so a lot of the silver investors were waiting on the sideline for gold to correct back to 2,000 or below 2,000. It never happened. And then what happened was that in about 7 months ago, in May of 2025, 7 months ago, when the investors and punters realized that gold was never go back below 4,000. So that epiphany moment came, and that's why a lot of the money rotated out of silver into silver from gold, and a lot of the bystanders started getting into silver. Uh, like I talked about, fundamentally, silver could go a lot higher because it's always been money. I mean, technically speaking, fiat is worth nothing because it's printed off thin air. The replacement value is zero, only the faith of the public to buy into the idea of a Ponzi scheme. So it's not really helpful to discuss sort of the theoretical of silver in terms of dollars, because it could be 1,000 as well as 500. It could be 10,000 or 100,000, much like crypto. So you can only sort of assess the silver price from a technical perspective. And from that front, silver is being over $50 only twice before recently. So this is the third time it's being over $50. Every time it overcomes $35, it goes to $50 plus in 2 to 3 weeks. So first time was in 1980 when silver went from 15 to 50 in like 3 weeks. And the second time silver went from, it was in 2013 when silver went from 20 to 50 again in 3 weeks. And third time what we witnessed again is that silver passed $35 in May. And I was on X and talking about now is the best time to buy silver at 36 rather than at 34, because it could be because the market can stay irrational longer than you can stay solvent. It took a little longer for silver to sort of, it didn't take 3 weeks, it had to take about 3 months. Partly the reason is that it was in the summertime. Usually summer is the summer doldrum, the traders in the Hamptons. But sure enough, in the span of from May to here, less than 7 months, silver went from $35 to the high of 120, and now we're settling at around 76. As I mentioned, intrinsically, silver could be any price measured in dollars in due course, as fiat system is never survived in the history of mankind. It's only a matter of when, but not if. But in the short term, silver has broken out of that $35 handle and breached over 50, and it's the first time in history that it actually went past history 50 and sustained over $50. And part of that reason is people track gold to silver ratio, and it's the first time ever that gold has taken out 2,000 with ease. And not only past 2,000, went to 3,000 and 4,000. So definitely something is missing a foot, and people can attribute different reasons, and we can talk about them.
I think for me, like, we try and analyze the markets in a kind of 360 manner. We think silver fits into the big game of markets that reflect what's happening in real life. We think crypto fits in there. We understand there's correlation between markets. And I think for me, when I saw gold, our target for gold was 3,500, which it shot straight through. That was based on a cup and handle.
That was my target too. Yes.
Traditional sort of technical analysis got us there. It just straight through. And I think the interesting thing with that is I always ask the question of what's happening for gold to be doing this. And then, of course, silver, there's probably a number of reasons, but I think more significantly is if you have these what have been termed monetary metals moving in the manner they are, there's probably something going on with the monetary alternative, which is the one we're given being the fiat systems, which are made up. John Law started this a long time ago, was one of the pioneers of it. And here we are today. Is that the big picture of what's going on? Is there's an unwinding in regards to the monetary system that we all know and are familiar with, and that's why silver and gold are acting in the manner that they are? Is that the big picture of what's going on here?
Right. My base target for gold in 2025 was 2,800. That was based on the cup and handle formation on a linear scale, and on a law scale, exactly 3,500 was my target. And it shot through 2,800, had a breather for a couple of months, and then went to 3,500. It settled there for a couple of months, and then went to 4,500. So definitely something is cooking. And my view on that, in the context, is much to do with the impending central bank digital currency. Some people don't want to be governed and dictated by these macro mandates with the digital currency. So what that means is once the rollout of the digital currency, starting with Europe, they're already talking the white paper, and the trial is going to happen the end of 2026, the trial, and go full-fledged in 2027. of which the UK and Australia will follow, soon followed by England, is that you'll be dictated on when you buy, where you buy, and what you buy. So if there's a curfew for whatever reason, health wise or whatever, your money will be no good after midnight. And if you want to go for a drive to on your Pacific Coast Highway, Highway 1 in California for an hour to buy a can of Coke, you can't do that if there is a Costco next to you. And if you eat too much beef, or well, if you've flown from Asia to New York, that's about 1,000 tons, 1,000 kilos of carbon, and that is your quota for the year. Then you'll be eating tofu for the rest of the year. So it's much to do with digital currency, and people try to circumvent, get away from that mandate. And the way to do that is physical gold and silver. Now, I want to elevate the storyline even higher. Why is it with this digital mandate? And that is to do with the 2030 agenda of own nothing and be happy, separating the middle class, restoring back to the two-tier system of the peasants and the king. And the CBDC will be married with carbon credits and social credit system. So what's happening, Rupert, is that the system being flooded with money since 1910, since the advent of the central bank. That's when the money printing started. Some people has a upper hand advantage of printing behind the back and never to pay back in the name of a loan or whatever instrument you want to call it about. Is if you look at the price of a stamp, right? It was like 2 cents, and now the stamp is like 50 cents. So obviously somebody's not playing by the rule. And that now the problem is that you got a third of the 20% of the population. That is middle class. They can fly. They have good living standards, and the king doesn't want to be part of the system. They don't want to see the crowd. They don't want to see the peasants on the holidays in Santorini or go to New York's Times Square for New Year or go to their vacation in Cape Town in South Africa. So now it's coming home to roost. For this 100 years of printing, it's not so much the system is broken per se, but it just too many people can become too wealthy. So they are trying to find a way to drain the system. Now they have the tax. If you live, you have a tax. If you die, you have a tax. If you're home, you have a tax. If you make money, you have a tax. If you invest money, you have a tax. So the system was rigged in the first place, but still, right? There's too much money in the system. So they want to drain that money. And the way to do that is central bank digital currency coupled with credit system and the carbon credits. So social credit system with the carbon credit, so that you'll be sort of pigeonholed into where you were, even if you have money. It's kind of like a missions club where it's members only. So even if you have money, you cannot do anything. And the inflation is also created artificially, because if you look at oil, which is the baseline of all the costs, and that's $60. The inflation should not be high as we are now, and that is a collusion between the government and the major enterprises, starting with COVID, to erase the entrepreneurial producers to resort to the McDonald's and the Amazons, and from there it's much easier to set the price, which is what they did. So it's altogether it's about the 2030 agenda through micro mandates and through carbon credit system and social credit system and the carbon credits, and then you cook up inflation, jack up the interest rates to create that two-tier systems of the king and the peasants, and the monetary system will be handicapped and restricted as a result. In that essentially the living standards will be lower through inflation and these micro mandates, and people see that. So the people that are buying gold right now are the billionaires and centi-billionaires. They're not here so much to make money. It's not, I made another $1 billion in glowing gold in my gold position. No, it's about preserving the living standards. And what I mean by that is it's not so much, Rupert, I want to be very clear in setting this point. It's not so much that I'm upgrading do you drink whiskey? It's not so much like I'm upgrading like Johnny Walker from a red label to a black label or to a blue label, but it's a matter of being able to purchase a Johnny Walker at all. And so that is what we're dealing with. So there is, you can call it a reset of the monetary system. Um, but whatever you call it, and gold and silver now is signaling that distress and that people are getting out of the system altogether. It's not about Republican or Democrats or Labor Party. It's not about white or black or red or blue. It's just about getting out of the system, preserving your living standards. And gold, physical gold and silver is one of the only ways to go about it.
You know, I've always been an admirer, I think, of the gold and silver bugs, because I think they've always got things. Timing is everything in markets, but actually being convicted, as the gold and silver bugs have been, as I know you have been, does pay dividends, certainly if you've got the big picture right. And I think the likes of CBDCs, really what's going on with gold and silver is they're kind of offering an alternative to bondage, financial bondage, in regards to the system that we're moving towards. You know, and this is the big kind of move that we're seeing. And the crazy thing, and as we've got you on the show and we've got the opportunity to explore this, is the fact that most people don't really know what's coming. There's a major change going on. The fiat systems realistically can go on for as long as people believe in them. I always have this conversation with people and they say, no, it has to fail. We've got $38 trillion in debt. And I say, there was one point where we had $1 billion to $1 trillion. And now we're in this sort of magic Mickey Mouse land. But as long as people believe in it and don't wake up, they're in it. Gold and silver effectively are that vessel out. And I think it's very interesting that you relate the moves that's currently taking place to CBDCs and this kind of need to preserve your standard of living, your wealth, your status outside of serfdom, which is clearly the agenda and the road that they're trying to take us on. Could we talk a little bit more about that for normal people? What is the ultimate agenda? This is a big question for you, John. What is the ultimate agenda for everyday normal people that they're trying to bring about with the likes of Agenda 2030? This is important for people.
Yeah, you seem to carry a British accent. I went to high school in England. I'm very fond of that country because I was educated there.
Yep.
Well, UK is a perfect example. If the book is played out as they envisioned, there would not be even commercial flights out of UK. And you have these 15-minute cities where cars will not be able to enter. So you'll be biking within 2 kilometers where we live. So you're in prison, like you said, that word bonded. And so the digital currency, as I mentioned, it's not just money that you can spend, but think of money become like a coupon, right? So you can buy ice, but you cannot buy Haagen-Dazs. Or you can buy synthetic bacon, but you cannot buy the real thing. It's happening in that, for example, Australia, if you try to take $10,000 or more, they can ask you why, fill out a form. I believe in Europe, in next 2 years, the money will be phased out completely. Like the cash might have been remained to only be spent on petty things like tampon, right, or like toilet paper. But anything over $1,000, you have to go within that system. The reason is so that if you want to buy, like if you want to fly or if you want to buy gold or silver, you'd be flagged. The ramification is significant, and this is not conspiracy. In UK, 13,000 people or 14,000 or 15,000 were arrested last year, and that's 10 times more than Russia for making a comment on YouTube. And imagine if all of your money is residing in CBDC, you say, "Oh, I already transact digitally. I pay with a phone. So what's the big deal?" Well, the big deal is once the whole system is linked to this, the whole monetary system is linked to your wallet, of which you can't even use your grandma's wallet because there's facial recognition system now. Then if you jaywalked, right, then you'll be house arrested for like 3 days because you can't go out, you can't spend money, you can't buy a ticket on the bus, you can't eat. You'll be like, you'll be fed rice and chicken for like 3 days for jaywalk or say something improper, doesn't jive on Facebook. It's happening already. And soon enough, with this 15-minute city, then you cannot drive, you cannot fly, you will be bonded. So that is what's happening. it's the writing is on the wall. It's plenty on the wall, and then they try to drain you now. Every year to be assessed the wealth tax. In Los Angeles, they're discussing it. In yesterday in Netherlands, one of my dear friends, the lower parliament already passed. It's going to the Senate. So the complete political system is infiltrated, and this is not too late. But the fire, there's just a smoke. Imagine watching the movie in the theater. There's already smoke already, and you can see the siren that's coming, and you got to plan on it. Obviously, if you have no savings, you work for government. There's not a whole lot you can do, but maybe just get the hell out and salvage what you have and start something something new. But with this Brit ID system, it's easy to implement because for every country, Rupert, anywhere from like Canada, maybe UK, around 30 to 50% of the population is on government payroll. So, well, it's easy, right? If all they only collect is to have a Brit ID of which they pay you in digital wallet, then you have to comply. And then they're gonna roll out followed by your tax. When you pay your tax, then they're gonna say, well, the only way you can pay your tax, your social insurance payments and your income payments or your house mortgage payments, your real estate tax payments, anything to do with government remittance have to go through this digital ID. And if you don't comply, they would just take your house away. And in US, in Canada already, all your homes are these titles are digital titles. Like I missed my tax payment in Las Vegas. I have a home in Vegas. I just forgot about it, paying tax, and then 12 months later, I was told by my realtor that my home is on the block on auction. I was like, holy shit, right? So if you think you own something, you actually don't. The HOAs can also put a lien on your home and sell your home without your acknowledging at all. And then so there's a lot of ways for the government to coerce and to make you comply. There's nothing you can do about it. This is not a fight that's worth to put up with. And so if you have any means at all, the signs are there. The signs are there. You got to get out. So that's your answer to the question. What is ordinary Bob and Joe are to do with this is that it's a COVID too, except there's no expiration on these mandates. It's very sad, but it's coming.
And I think that normal people probably don't realize this. They probably do. Ignorance is bliss, and I can sympathize to a degree. But there's this broader kind of, we'll call it communism, a kind of techno-communism that's being spun up. And actually, if you look at sort of communism and sort of dictatorships throughout history, there's always this idea of control via financial means. And silver and gold are not controllable. I mean, I had a good friend of ours come on who's South African, and he remembers as a kid sneaking cougarans out the country.
I've heard of that from my friends too. Yes.
And that whole concept of gold providing and silver this kind of escape out of or providing a little bit of freedom and things like this. It seems like we're in that kind of state today, and that's why we're seeing the sort of moves that we are. And one thing that's really interesting to me is, okay, we know that silver's put in a new sort of high. It's broken out for the first time since the 1980s. What do you think happens from here? I think a lot of people are asking, and I can't help but feel like that, what was it, a 40% or 38% move that we had in one day really just serves to try and scare everyone the hell out of touching this metal. What do you think about where silver is today and where it's going, and also the kind of volatility that we're experiencing? Because it's crazy. It's trading like an altcoin, right?
Well, it's a complex subject. I followed the market. I studied the market for 25 years. So I can write a book about it, and maybe I could be wrong, and I'm still learning. When I say fair value, fair is a relative word. I say at this very point in time, the collective conscious at this point in time would spell for silver fair price around $75. And so just take that for granted at this first. I mean, a lot of that is to do with technical trends. If you draw the cup and handle formation, the fair value on the linear scale will be 75. On the log scale, it's around 120. So it hit 120 on the log scale, and had a correction. My view on that, Rupert, is the gold and silver is heavily managed and manipulated through the advent of the futures market. So at the peak of the market, silver traded 1.2 billion ounces in a day. That's the annual production of silver. So that is recognize this is the system we're dealing with. The volume, volume of silver in nominal values exceeded the annual production of all the physical silver out of the ground. Now the cartels, in order to discourage the purchase of silver participation and the public participation in silver, they do a lot of things. One of the things is that they would actually bid up silver futures, so to exhaust buying and create that FOMO. And I believe that's what they did from silver from 100 to 120. So they were actually the main buyer of silver from 100 to 120. And that's why when they whack the silver price, I think sometimes you can see the crypto market as well. It's almost like the market is around rational, like there was like the rug was pulled from underneath. So the only way to explain that to my knowledge is that a lot of that is artificial in propping up the market by the cartels. And then they will then, when the timing is right, they will then punish the longs and create, and then the guys that were FOMO and you know what, it's going to go to 120. So if it's 120, well, the 90 is a good price, right? 90 is a good price, then the 80 is a good price, 80 is a good price, 70 is a good price. So in the span of 4 days, actually silver went from 120 to low 63. So almost went halved.
Crazy.
And
yeah. Have you ever seen moves like that, by the way,
Oh,
John?
it has actually. Silver, like silver in 2011 went from 50 to 25. Very, very similar. If you just pull the chart of the silver peak to the bottom, like the action is almost identical in terms of the magnitudes and the rebounds and the subsequent price actions. It's actually very similar from 2011, 1980, and then in 2021. So my view on that is a lot of that price action is artificial to draw that people and to punish people and to establish that artificial top, because you can see it's a very clear, like the candlestick, right? So it's classic. Anybody who studies that. So where we go from here is that silver follows gold historically, and silver is a very small market. You also got to keep in mind that annual production of silver is 1 billion ounces. So that's like $100 billion. That's like a drop in the bucket, right? That's not even like 100 billion is not even a tenth of a Microsoft. So it's a very, very small market. So you can't really accurately predict, because just one guy like the Hunt brothers, right? Or like there's a dozen or dozens of people that can move the silver market easily. Just one person. But if you look at gold, I want to talk about gold because gold, my short-term target for gold is $6,250, $6,000. The reason I arrived at that is if you look at the gold window in 1972, 73, when gold window was severed, it was $30. Eventually, it took 10 years from 30 to 800. So that's a 25. That's almost a 30x, 25x. And if you look at the gold bull, the bull market for gold starting year 2000, when Gordon Brown, Bank of England governor, dropped that last batch of gold in year 2000, gold was 250. So if you were to multiply 250 by 25, you're going to come to that number of 6,250. Now, it took a bit longer because there's not a gold window per se, but gold is still very actively managed, and even more so today. So if you multiply 250 by 25, that's 6,250. So that is the peg for me for gold. So gold went up from 1,800 to 4,000, 5,000 without a stop in 2 years. So it's probably going to take a breather here. The big guys are going to have position to gold already did, and it's already taken trillions of dollars to get gold to where we are. So I would not be surprised if gold to consolidate here between 4,600, which is the 50-day moving average, to 6,250. And the silver, depending on the gold to silver ratio, at 70 gold to silver ratio, silver is going to be between $60 to $100. So that is probably my target for silver for 2026. Now, of course, you could also outliners. It's almost it always dealing with probabilities. But if the market were to stay the status quo, barring a war or barring some things that's unforeseen, likely gold is going to stay at 4,600 to 6,250, and the silver is going to be between 60 to say 120.
Yeah, and what do you think about the gold-silver ratio? You know, this is a topic that I think about a lot because it's kind of going to dictate which one you want to be in, I guess. How do you think about the gold silver ratio and perhaps where it's going? Because you have some people prophesying that you're going to see single digit silver versus gold.
It's possible.
You know,
It's
I don't.
possible.
Let's talk about your views on the gold silver ratio.
Yeah, well, the modern gold to silver ratio is 70 to 1. So at a $5,000 gold, at $5,000 gold 70 to 1, then the right price for silver is $70, right? 7 times 7 is 49. So silver is resting at that level. But you in prior history, when the peak of the market, gold to silver ratio can go as low as 20 or to 30. So I'd say at 30 gold to silver ratio at $6,000 gold, then silver would be like $200, which is fathomable. It's plausible. However, you don't want to get too cute on these ratios because historical ratio of gold to oil is 10 to 1. So at a $5,000 gold, then the oil will be like $500, and oil is $60. Consequently, we're Oracle, which is one of the fund, is an investment fund, and we're very, very long oil because oil, even though there's abundance of oil with AI and so not with AI, but with solar power and EVs, but people forget that oil is energy and AI is all about energy. That's the basement stack. So, but you want to get to, so my point is you don't want to get too cute about these ratios. And also that we had invested in platinum before 15 years ago. So, oh my God, platinum to gold ratio historically is 1.3 to 1 with platinum at a premium. But yet now gold is at 5,000 and platinum is at 2,000. So if you had invested in platinum based on these ratios, you'd have cried to mama, right? So you don't want to get too cute. Usually the gold to silver ratio is at the blow off stage, and I don't think we're entering that blow off stage yet because eventually I think gold is going to surpass like 6,000. So silver in the modern sort of ratio at 70 to 1 is fairly valued. Silver has been a bit of a laggard. Silver was only 30, and gold to silver ratio was at 100, and the ratio was at 100 only a couple of times in the past. So certainly there was a bit of abnormalities, and the reason for that laggard for silver is because of the lack of industrial demand. And because the cooling of the global economy. So people say, oh, silver, you buy silver because of industrial use. I don't subscribe to that because when silver industrial demand goes high, when the silver goes high, when silver price is too high, the industrial demand will curtail as people look for substitution. So it's always the investment demand that drives the metal prices or anything else per se. Because when the prices go higher, investment demand increases. Whereas industrial demand curtails as prices go up, people look for alternatives, and so it speaks for the tepid cooling of the global economy, and that's the reason silver is being a lagger. And now silver's caught up a bit, but silver went from 30 to 120, so there's going to be it's reasonable, it's plausible, it's reasonable that silver will consolidate here at around say 60 to 100 for a while, maybe this year, before embarking on the next leg, especially if gold to take out 6,000.
Do you think what we've got going on here also, so we spoke about a number of things that are going on that are relevant to metals, precious metals. Do you think there's also, people float this term of a commodity cycle or kind of a more broad industrial cycle taking place? What do you think about that? Because it's interesting. When you talk about kind of the price of silver going up, okay, investor demand increases, but perhaps industrial demand curtails because people look for alternatives. If you look at copper and you look at some of these alternatives, actually generally commodities and metals broadly look buoyant. Do you think there's a more broad commodity industrial cycle taking place now that's going to fuel the likes of gold and silver?
There's always an element on industrial demand, right? Industrial driven versus investment driven. So every metal, just like crypto, like there's a spectrum of crypto, some go up, some go down. But if there's general investment interest in crypto, then all the cryptos float, much like commodities. However, I favor gold and silver, and which has clearly outperformed base metals like nickel and zinc only to start recently. Even copper only just broken out, still hovering at that breakout level of $5 a pound. So it has underperformed. And part of that reason, as I mentioned, is that the investment demand right now if I'm gonna invest in metals, right, the first thing came to mind is gold and silver because they're precious. So, but then once gold has a run, then guys are gonna take some profit out and invest into other base metals, just like people make money of Ethereum, they're gonna invest in Dogecoin. So I think there's a bit of that spillover, but all in all, I don't think there's a general speculative. You don't hear CNBC talk about, oh, that's by copper, right? That's by nickel. Oh, is people speculating on zinc? No. So I don't think there's a degree of retail interest or even institutional interest in metals. Part of that because they were punished for investing in metals. There's actually code in penalizing in buying physicals for retirement or some investment vehicles, and so generally speaking, like remember, like there's also if you look at per capita consumption of metals and commodities has been trending down. If you look at oil, right? You remember like oil was 120, people have peak oil theory and whatnot, and just per capita consumption of the metal generally has been trending down, not going up. So overall, I'm not a big fan. I'm not a big fan of say copper or other base metals, and also a couple of technologies I'm not a big fan of base metals, and commodity is really outside of gold and silver is really industrial demand driven, of which then you got to analyze the underlying metals per se. But then when the price has gone up too much, then you got to have that substitution effect. A great example is cobalt and manganese, which is the cathode transition metal over batteries, but now it's gone back to iron, right? Same with anode, which is graphite, now synthetic graphite, which is carbon, and even the medium on the charge carrier, which is lithium. Now lithium is expensive to go back to sodium, so it's not an easy market to invest. It's reserved for the highly specialized. So I don't necessarily subscribe to, as I mentioned again, industrial demand driving prices overall as a whole. Not to mention also one more point is that there is overinflating of global population, of which I don't believe there's 7 billion. I think it's maybe 4 billion at best. And that is through traveling, witnessing myself all around the world, and some very good research empirical evidence of various different researchers from electricity consumption, from salt consumption per capita to arriving at the global population at around 4 billion. In the case of China, they have less than 500 million. I don't think Japan is anywhere near 100 million. I think they maybe have 40 million at best.
The overpopulation narrative that they use to penalize us is utter nonsense. Yeah, and I often do think about that. I wouldn't be surprised if they have spoofed global population numbers, because who really, they could tell us whatever they want, realistically.
How do you know? You don't know.
Of course, you know, there's a lot of things that, I think history is always a great teacher. When you look throughout history, you'll go, oh, hang on. And there's always an alternative. And if you start listening to those alternative narratives, you kind of go, the world quite isn't as we've been told. And I wouldn't be surprised in regards to any of that at all. I want to talk about silver miners. This is what you do and do an exceptional job at. And we're going to leave links to where people can find Silver Elephant Mining and a little bit about yourself in the description. How do silver miners play into everything that's going on right now as the producers of silver?
Price is 100. It was 100 not even a week ago. And that if the cost of producing silver is $99 an ounce, and silver is $100 an ounce. So at that price, at $100 silver, the margin for silver mining company is $1 an ounce. It doesn't seem very attractive. Like if you produce 10 million ounces a year, then you make $10 million because your margin is $1 an ounce. But imagine the silver went up 10% from 100 to 110. So the silver price went up 10%, right? But the margin for silver mining company all of a sudden went up 10 times from $1 to $11. So this mining company used to make a $10 million a year, 10 million ounces annual production. And now all of a sudden, their cash flow is 100 million, right, at 10 million ounces a year. And all of a sudden, their PE ratio went up 10 times. So their stock went up 10 times. So that is the allure. that is the storybook of buying a silver mining company. And but not to mention, but it can go the other way, that if silver went down $10, then a mining company could go belly up, especially if they carry a lot of debt. So therefore the way and the other thing is that silver mining companies are valued based on cash flow is one thing, but also based on what they call the optionality, meaning the number of silver ounces in the ground, which means and the way to look at it is the amount of paper you have that's yet to be printed, right? And valuing silver companies are art than science. And a lot of people made a lot of money on silver mining companies, but you got to be very good at timing because of the volatility of the silver market. And then the other thing is one other point is that a lot of these mining companies they don't actually produce silver, so it's only purely on the optionality of which that there is a carrying cost. Meaning that there is the match to burn, the carrying cost, meaning that there's a G&A, there's a lot of upkeep in keeping the light on, and also the silver mining company is a burning match, so it's a depleting asset, right? As more silver being dug out of the ground, your reserves shrink. So it is a very complex mathematical formula, and it's more art than science. But certainly the appeal for silver mining company is that on an uptrend, on a silver rally, silver mining company can deliver multiple times of the return from betting on silver alone.
It's why I love having people like you on, because I've done my due diligence into some silver miners and tried to understand that industry as a whole, and you find out just how varied and kind of specialist you need to be in regards to fundamentally working out the value of these miners, which is above my pay grade. However, I think that given the moves that silver's seeing and likely going to continue to see, miners can act as a leverage play on that, a kind of option to that, and as you mentioned. And I think, how are you viewing, let me ask you, so we're talking about how there's an opportunity here with metals given the world as it's changing. How would you play that? Obviously, nothing that we do or say here is financial advice. How would you play that? Let's say you're just hearing about this opportunity today or this lifeboat today. How would you look to play that in regards to a combination of gold, silver, and maybe miners as a leverage play?
Gold and silver is money. So I would not buy gold and silver to speculate, to make money. As I mentioned, it's about preserving. It's about preserving your living standards. If you think you can use your grandma's digital wallet, think again. Because when I'm traveling, I'm a Taiwanese native, but when I landed in Houston, the facial recognition, they don't even look at my passport. And if I had to board Delta fly, I would do facial, and they don't even look at my boarding pass. As since when did I submit to these submit my digital data? Well, you've been doing your iris scan and your fingerprints for the last 15 years. Coincidentally, all these machines, whether it's in Asia, or in Thailand, or in Taiwan, or in the US, these machines are made by the same company, by the WEF. So all your data biomatrix is already centralized. It's capable. Next time you buy gas, right, you're going to be scanning your iris. And if you bought too much gas already, you will not be able to drive anymore. So the metals, you want to look at metals. As I started buying silver, it was $4 an ounce when silver was 250, and I buy the silver maples. That was 2003. I remember, and I kept buying silver over time. So I'm not saying, oh, my silver went up, I'm going to sell. So physical is a way of preserving your living standards. Now, when you buy silver mining company, then you're buying. It's kind of like you beef, and you're buying like cattle ranch, right? Mining companies is the same. So it's kind of like you're driving Tesla and you're buying Tesla stock. So it's a speculative vehicle, and the way to do that is I would highly recommend you diversify and focus on U.S.-centric mining companies that has still been a rule of law. I mean, looking at especially wreaking havoc the kind of world that we're in right now. And you want to spread your baskets in the multiple companies, even industry insiders like me, who's been around for 20 years. And the people that I speak to in the industry, like oh, we talk about what do you think this company? And there was like, well, last time I bought this company, I went down 20%. So even the industry insiders who've been around for 20 years still couldn't figure out. This is one of the most asymmetric information flow in the in industries that I participated in. So you want to spread your basket. You want to really spread your bets in different baskets, and then you want to preserve. If you're near your retirement, if you just preserve your living standard, you should be parking 80% of your money in metals and 20% of the money in. I'm talking about sort of as part of overall portfolio. So if you dedicate 20% or 30% in metals, then you want to within that 70% in metals and then 30% in the mining companies.
I think I always wonder that, because even for me, I've been buying sort of silver, not so much gold, but silver since I was a teenager. And it's always been that insurance, just in case. It's nice to have something for yourself that you can do whatever it is, you can get to if you need to, certainly given the recent price moves that we've seen. And I do like that take. I agree with it in terms of, look, silver and gold really are your insurance. They're your money. They're what's going to save you from the changing world as we know it. And we spoke about how it's changing.
Heck, buy a couple of palladium coins, buy a couple of platinum coins. The industrial demand are abysmal. They're absolutely doldrum. People don't get married anymore. People don't drive gasoline cars anymore. They don't need catalytics anymore. And there's no jewelry demand. But yeah, they're so low, right? You never know. Annual platinum production is around 5 million ounces. So you're talking like $10 billion worth of demand. It's almost a drop in the bucket. So you want to buy anything that's rare. And that is limiting production. And so just buy the basket of coins.
And that's on the backdrop, of course, of a kind of proliferating fiat system and increased controls being sort of thrust upon everyone via it. And talking about how maybe they might enable some of this, let's talk about crypto. You had a background in the sort of .com world. There's this kind of new technology that is cryptocurrencies, distributed ledgers that are akin to the internet. They're trying to enable this kind of internet of value that's kind of popped up. And how do you see that? How do you see this technology changing the world, perhaps for good or for worse? Because when I think about a high-level overview of what crypto's doing, is it's kind of creating this new financial global system. There's problems that the financial world has faced, and one is, how do you get it to become global? Crypto seems to have solved a lot of that. Is that what you think is kind of going on here with crypto? What do you think this technology is here to do?
I've been thinking about that, Rupert. I've been thinking about that. And let me share a perspective I don't think you've heard from anybody else. I watched crypto when it was started. I remember it was $15 a coin because I had worked for a company called Gold Money in early 2000, and they had a patent to digitize gold, which means that they would store, people would buy gold on their platform in digital gold in grams. And once you buy gold in grams, and they would take that money and actually buy gold in the vault in either Switzerland and Hong Kong. So the amount of grams in circulation digitally is always equivalent to the amount of gold that's in the vaults. And all of a sudden, I was chatting to some of our Gold Money customers, and it's, I'm buying Bitcoins, which is a digital gold platform. I remember Bitcoin was $15 at the time. So the guy liquidated his holding for like $100,000. And a grain of gold, coincidentally, also around $15 at the time. Gold was like 400, and so 430 grams in an ounce. So that gold at that time was $15. So it's 15 to 15 is 1-to-1 exchange. I remember so clearly. My view is different, Rupert. I don't think the financial system is broken. Like the merit of Bitcoin and blockchain is that there's that integrity, right? Because when the coin was born, you know where the coin was born on the ledger, and you can track the movement of that coin throughout. It's a chain, right? It's like a tail. So you know that coin is 100% good because you can track where all the coins is being. Where is the change hand? Where was it born? Where was coins born? And where has the coin traveled? So you preserve that integrity from the get-go. So, but then if you think about it, I mean, the current financial system is sound. What I mean by that is the dollar you have on Barclays Bank, right, or HSBC, like you're never gonna get a fake dollar. It's not like you take a dollar from It's not like you take a dollar from Wells Fargo and then you find out the dollar is fake. Like, come on. Like, when was the last time you had a counterfeit? So the whole idea that the crypto is to address the integrity of the system is flawed because the system is good. And they say, okay, now you can transact anonymous, or you can transact money like internationally, cross border easily. Well, the SWIFT system used to be quite broken. Like 30, I'm 52. And say back in 30 years ago, when I was studying England, my father wired money from Taiwan to London. Sometimes take like a week. Okay, but the SWIFT system now is a bit band-aided, but it works. Like, you wire money in the morning, in the evening, if all the digits correct, and if your name is not on the terrorist list, you're gonna get your money at the end of the day. So the system is sound, Rupert. I want to be very clear. So now, outside of a alternative monetary system, like, what does the Bitcoin serve, right? Well, there's the dark web, right? If you want to buy like a broken, like, arm or kidney, or some nefarious cause, that is good for that. Or if you want to circumvent a monetary control, like Argentina or China want to get money out, you could dig in crypto. But I want to tell you one other way, as I've been thinking about it. Are you ready, Rupert? Why crypto is created? There's two reasons. One is is that if you want to add, like, if I were to ask you how rich you are, what's your net worth? You would say, I'm worth 5 million. I'm worth $30 million. But for the king, for the people that created the printing machine, it's like as if you ask the king, right? Like, how much money? What is your net worth? Well, the king has the printing press. Like, the money has his face printed on it. So obviously, the king's wealth is not measured by dollars because he owns the printing machine. So the two reasons that cryptos are created, one is to circumvent, is to dissuade the public from buying real assets and compete with the king. So the real assets are real estate and equity market. Remember, like 30 years ago, people said, well, you want 80% bonds and 20% in equities, right? And well, bond is the instrument of the king, it's printing machine. So people don't buy that anymore. So they created this crypto and kept promoting crypto, marketing crypto, because it's a fake system. So that the king can continue to print to buy the equity market. So now to the point where the king owns 90% of the S&P 500 through proxies of State Street, Vanguard, and BlackRock. Like, these companies used to own not even $1 trillion. Now they're owning like $30 trillion of equity. Where's the money coming from? Nobody asked. So that's the first thing, to dissuade, to divert the public interest from real assets in real estate and in equity. And the second reason, Rupert, is this, because I've been traveling, is that it bypasses the traditional money system to bury the evidence of money printing. So, for example, in Thailand, of which I have residence, now they're building skyscrapers like crazy, like literally. The recent voting, they find out the QR code is rigged with ballots. Is that imagine if you were to come to Thailand or other countries, right? Like in the United States and UK, you don't need cryptos because they own Wells Fargo, they own Bank of America, they own the BlackRock, the State Street, so they don't need to disguise their identity. But if you were to go to a country like, say, Thailand, or a South American country like Peru, if you were to just drop like $10 billion to buy like a cattle ranch or a building, right, to build something, well, the KYC is going to say, where did the money come from? And you cannot just say, well, I printed that money, like literally coming from the printing machine, of which they own a couple of them. Elon Musk identified 17 of them, okay, sitting on Department of Defense, sitting on the welfare system. So you cannot just print from thin air and deposit it in your bank account, and then all of a sudden to buy like a ranch in Peru, the guys are gonna say, where's the money come from, right? And the ledger will be like, whoa, it came from like a bank, 10 billion just dropped into your bank account. So the way they can circumvent that is they print money and they buy crypto. And then in crypto, they change it in a couple of wallets and they drop the crypto in a country. and then from there they get the money, and then the local fiats, and then from there they transact. So the reason they do crypto is a bypassing of the KYC to invest long money laundering abroad mostly. And that is the reason.
Yeah, no, I have heard that actually a number of times in regards to these big operations, and I think when you look at certain crypto companies as it relates to stablecoins and things like this, there's often very interesting beginnings
Look at
in
Mt.
regards
Gox.
to
Look at
intelligence agencies.
Binance, right? These big ones are all money launderers, huh?
Yeah, and the other one is the useful idiot theory. I think around crypto is this kind of idea that this narrative is being pushed to us to get us further and further away from the truth of maybe gold and
A
silver
trial run of
and the
CBDC.
kind of
Exactly.
absolutely. I think one thing that I did think about to put forward as an idea to you was, if you look, you have the Bitcoin versus the gold debate, and I happen to side, even though I'm a crypto guy, I side on the gold debate in terms of a lot of points. But one point that I think the Bitcoiners have, as far as gold being money, is the portability of it, the fractionalization of it, the practicality of it being used in a day-to-day world. I actually think that if you could represent, like you had spoken about, was tried to be done back in the sort of .com era. Yeah, if you could represent digital gold, you could almost enable a new global standard for money. What do you think about that?
Two things. I will leave the discussion on crypto sort of origin and purpose to just this. Recently, there's like millions of Epstein files dropped, and the Epstein files, there was emails talking about Satoshi even before cryptos were created. So, and the Epstein is also known to being very closely linked with the cartels. I'm not going to name names because I'm really pushing the edge here. So it's very clear to me that the guys that created cryptos are also the ones that created this modern monetary system, of which that got the fiat system. It's the same people. Now, in terms of gold and silver, I don't think it's not that immobile. A 400-ounce bar would be like, would be the size of this toilet paper, right? 400,000 ounce, 400 ounce times 4,000, 16 million, I believe. 4,000 times 400, 1.6 million. So a bar like this is 1.6 million. I mean, certainly you can have quite a bit of goldsmiths that can just kind of like Western Union. But you're right that eventually through this digital system you can digitize gold. But the question has always been, who's going to watch the watchman? Meaning that who is debiting and crediting these digital tokens based on the amount of gold they have. And secondly, it's also that nationalization risk. If people find out where the gold and silver are in the vault, the government can always attribute it to, say, terrorist organization as a way to nationalize the gold and silver you have. So in the end, there's no better way to own gold and silver than with physicals, and that's why I recommend. And so I think it's a lot more mobile than you think, as I mentioned to you. Like I said, this is 1 million for a gold bar.
Agreed. Yeah. I just think in the sort of practical implementation, if you were to, like I say, the Bitcoin and gold argument, I often find myself siding with the gold people. But I think in terms of, like, if I was to go into a shop or smaller transactions and fraction, it's very transportable in terms of large amounts of money in a dense fashion. But I think more broadly than that, if it was to be used every day, whether it could be or not, I often hear people talking about a gold standard. I do wonder if that is even a world that many want to live in.
Certainly possible,
because
with the CBDC, you're going to have a black market. Imagine you exceeded your carbon credits, or your wallet got suspended because you jaywalked, and then you go to the gas station, and then you set up because your wallet doesn't work, and you give a coin, silver coin, to the Chevron guy. He will gladly take that coin, and he's going to take that coin, and he's going to go to the Ruth Chris Steakhouse, right? Because he loves steak, he exceeded his limit, and the owner is going to take that coin and do something else. If you watch a lot of these traditional kung fu drama, like in my view, try to carry just a silver eagle coin around. a silver eagle, a coin ought to be able to last you a day in 3 meals. So that is the gauge of what I think a fair value of a silver ounce. So remember when I was buying silver at $4 an ounce, when silver was $2.50 in year 2000, I said silver is vastly undervalued because you can get a feel for it. You're a human. You can get a feel for the worth of a silver ounce. And so at that time, I think, silver should be worth about 15. And sure enough, silver went from 3 to 15 in like 3 years. So the right price for silver, as I mentioned, is at around 100, because you can get 3 good meals for $100, which is a silver coin, which is the amount of efforts people dig out of the ground and float it, refine it, mint it. For all that efforts is good for a day's 3 meals. And so that is sort of the mentally, right, a calculation assessment of what the silver coin is worth. But I don't think that you certainly have. I don't think you need to digitize silver to make it worthwhile. As I mentioned to you, there's going to be a black market that circulates silver as a form of payment with these digital mandates coming down.
Yeah, John, let's talk about silver elephant mining. Let's talk about what it is you do there. Maybe share with our audience, where people can find you, where they can get on board with what it is you're doing. Obviously, you're the CEO. We really appreciate you spending the time with us. Let's talk silver elephant.
Yeah, I would just give a 90-second excerpts. Elephant is silver project is in Bolivia, and it's a very gigantic silver mine. It's actually the second largest, not second. It's not the second largest silver mine based on historical production per Wikipedia, because there's been more silver mines come on stream recently. But it is the largest underground silver mine in the world based on historical silver production. The company is mining silver in the outskirts of the main deposit, and so it's making money right now. Unfortunately, the main deposit is taken back by the government, citing breach of contract. So we're trying to get the contract back from the government. We're quite optimistic we can get the contract back. Bolivia is going through a bit of a dark times until the election comes November. So through these turmoils, some people took advantage and took the project away from us, citing illegal mining, of which there's no evidence produced so far. So we're very confident getting that the mine back, given that Bolivia is trying to regain trust in foreign investment. But nonetheless, there's some outskirts of the mineral claims of which we own still, of which we're producing silver. The market cap of the company right now is at around 20 million. And our comparable peers, if we get the project back, it's got 100 million ounces in the ground. The company would probably worth 200 million. So it's a 10-bagger, depending on whether we get the project back. But even if we don't, there's enough silver for us to mine in the next several years, of which we're mining and producing cash. So it's really a very low risk play at this point. And I bought a lot of silver elephant recently. So it's something worth checking out. The symbol is silver elephant, is silverelef.com. The ticker symbol is ELEF on the TSX, and on the over the counter is SILEF.
We're going to leave links to that in the description. John, the last thing for me to do is thank you very much for your time. My audience, I know, love these kind of conversations. Ultimately, we're all in this together. Stronger united, I believe, and they've done everything that they can to try and divide us. But it's interesting that under markets, we can unite under one banner and kind of try and figure out where the world is going. So, John, it's been an absolute pleasure. Thanks for coming on.
Thank you, my pleasure.